Hello everyone, I'm CA Neeraj B. Welcome to my YouTube channel at the rate Accounting Buddy NB. Today we are starting the most important topic in accounting, the trial balance. It is the bridge between the ledger and the financial statements. It serves as the first checkpoint to ensure that every debit has a corresponding credit and that the books are arithmetically accurate. This lesson begins by explaining the meaning and concept of trial balance along with its key features. We will then explore the objectives and functions of the trial balance to understand why businesses prepare them. We will also discuss the limitations of a trial balance as it may not always reveal all type of errors. The lesson then moves into the preparation and practical application of trial balance, and finally we will cover descriptive questions and answers. So sit back, relax and watch the full video.
Let us first understand the meaning of the word trial balance. Trial balance is a statement showing the balances of the accounts maintained in the ledger and the cash book balances, that is the cash and the bank balances. In the words of J.R. Bartley Boy, a trial balance is a statement prepared with the debit and the credit balances of the ledger accounts to test the arithmetical accuracy of the books. In the words of Carter, a trial balance is the list of debit and credit balances taken out from the ledger. It also includes the balances of cash and bank taken from the cash book. To sum up, a trial balance is a bookkeeping report that lists all the balances from the company's ledger accounts. It's used to check whether the total debits equal total credits, ensuring the accounting entries are mathematically correct. Trial balance is prepared after posting the journal entries in the accounts of the ledger and balancing them. The balance of an account is the difference between the total of the debit entries and the total of the credit entries in an account. If the total of the debit entries is greater, it is called the debit balance. Likewise, if the total of credit entries is greater, it is called the credit balance. Ledger accounts with debit balance are written in one column and those with the credit balances are written in another column of the trial balance. Under double entry system, for every debit there is an equal and corresponding credit of equal amount and vice versa as per dual aspect concept. Therefore, the total debit balances in different accounts of in the ledger should always be equal to the total of credit balances in the different accounts, that is the total of the debit and the credit columns of the trial balance should always match. It ensures the arithmetical correctness of the posting. In this slide, we will discuss characteristics or features of trial balance. Trial balance is a double entry checkpoint. It ensures that the total debits equal total credits, verifying the accuracy of the ledger postings. Trial balance is prepared as on date at the period end. Typically, it is generated at the end, that is the last day of an accounting period, which could be monthly, quarterly, or annually to summarize balances. Trial balance lists all ledger accounts and cash book balance. It includes every account from the journal ledger with its respective debit or credit balance, including the bank and the cash balance. Trial balance is not a financial statement, it is an internal report not shared externally. It serves as the foundation for preparing the financial statements like profit and loss account and balance sheet. Trial balance help detect errors. While it will not catch all the mistakes, for example, compensating errors or wrong account entries cannot be detected by the trial balance. However, it flags obvious imbalances. Trial balance does not guarantee accuracy. A balanced trial balance does not mean the books are error free, it only confirms the mathematical correctness. Trial balance is a two-column format presented in two columns, one for debit balances and one for credit balances. In this slide, we will talk about the objectives of trial balance. Trial balance ascertains the arithmetical correctness of the ledger accounts. The trial balance enables to establish whether the postings and the other accounting processes have been carried out without committing arithmetical errors. Trial balance helps prepare the final accounts, that is, the financial statements. Trial balance is the base document basis which the financial statements, that is, the profit and loss account and the balance sheet, are prepared. Revenue and expense accounts in the trial balance are transferred to the trading profit and loss account, while the assets, liabilities, and the capital accounts are transferred to the balance sheet. Trial balance is a summary of each ledger account. The ledger account may have to be referred only when more detail is required in respect of an account. Trial balance helps in identifying errors in maintaining books of accounts. However, it does not show all the errors in the books of accounts except the arithmetical inaccuracies. In this slide, we will learn limitations of trial balance. Trial balance is not a conclusive evidence of the accuracy of the books of accounts. If the total of debit and the credit side of the trial balance matches, it does not mean that all the transactions have been correctly written and posted in the ledger accounts. Even if the trial balance matches, some errors may remain undetected. Thus, the limitations of trial balance are: the errors of principle are the errors which arise due to the incorrect application of principles of accounting and are not shown by the trial balance. Compensating errors are the group of errors which are committed in such a manner that one mistake is compensated by another and the trial balance still matches. Some more limitations of trial balance are: transactions completely omitted from recording in the books of accounts are not known from the trial balance. Recording both the aspects of the transaction twice in the books of accounts are also not detected by the trial balance. Posting correct amounts on the correct side but in the wrong account is not shown by the trial balance. Wrong amounts recorded in the books of original entry and the same is debited and credited is not brought out in the trial balance. Let us learn how to prepare a trial balance. Trial balance is prepared by taking the debit and the credit balances of all accounts including cash and bank accounts. These balances are entered separately in two columns for amount. Debit balances are placed in the debit column and the credit balances are placed in the credit column. Let us learn about the format of a trial balance. Trial balance is prepared as on date. Trial balance has got four columns as displayed on your screens. While preparing a trial balance, following points should be kept in mind. It is prepared on a particular date which is written on the top. Column number 1, heads of accounts, that is means the name or the heads of the accounts are written in this column. The second column is for ledger folio, that is the page number of the ledger where the balance exists is written. In the third column, balance of the account if it has debit balance is written. In column number 4, balance of the account if it has credit balance is written. The two columns are totaled at the end. Let us now learn the tips for preparing a trial balance. Trial balance is prepared from the ledger accounts with balances and the cash book balance. In preparing a trial balance, all the accounts having balances are taken. Therefore, if an account does not have a balance, it is not shown in the trial balance. Ledger accounts having debit balances are written in the debit column of the trial balance and the ledger accounts having credit balances are written in the credit column. Purchase account always have debit balance. Sales account always have credit balance. Return inward or sales return account will always have debit balance. Return outward account or purchase return account will always have a credit balance. Input VAT or the input GST account have the debit balances. Output VAT or the output GST account has credit balance. Opening trading stock has debit balance. Generally, closing stock or the inventory is not given in the trial balance, but it is given as an additional information outside the trial balance. Closing stock is the value of the unsold inventory out of the opening stock and the purchases. It is valued at cost or net realizable value, whichever is less. The value of the unsold stock on the last day of the accounting period is debited to the closing stock account and credited to the trading account. Closing stock is shown as asset on the asset side of the balance sheet. All asset accounts such as plant and machinery, land and building, motor, goodwill, furniture, trademarks, cash in hand, cash at bank, etc. have debit balances. Capital accounts and liability accounts such as loans, creditors, expenses payable accounts, etc. have credit balance. Accounts of income and gains have credit balances. Accounts of expenses and losses have debit balances. Always remember the below table. Accounts are categorized into 5 heads. Assets are always having a debit balance. Example of assets are plant and machinery, land and building, stock, cash in hand, etc. Liabilities are always having credit balances. Example of liabilities are loans, creditors, expenses payable, etc. Equity accounts will always have a credit balance. Example of equity accounts are share capital and reserves. Revenue accounts are always having a credit balance. Example of revenue accounts are sales, interest received, cash discount received, etc. Expense accounts are always having a debit balance. Example of expense accounts are salary, rent, electricity expenses, purchases, freight, and all other business related expenses. Next illustration is state whether the balances of the following accounts should be placed in the debit or the credit columns of the trial balance. List of 16 chart of accounts is displayed on your screen. First head of account is furniture. As a tangible asset, furniture is recorded in the debit column of the trial balance. This aligns with the accounting principle that all assets inherently carried a debit balance. Plant and machinery is an asset, so it appears in the debit column of the trial balance as assets always carry a debit balance. Discount allowed is an expense account, so it is placed in the debit column as business expenses always carry debit balance. Salary account is an expense account, so it is placed in the debit column as business expenses always carry debit balance. Bank overdraft is a liability account, so it is placed in the credit column as business liability always carry credit balance. Cash in hand is an asset account, so it is placed in the debit column as the business assets always carry debit balance. Creditors is a liability account, so it is placed in the credit column as the business creditors always carry credit balance. Sundry debtors is an asset account, so it is placed in the debit column as the business assets always carry debit balance. Carriage outward and carriage inward both are expense accounts. So both these accounts are placed in the debit column as the business expenses always carry debit balance. Sales account is an income account, so it is placed in the credit column as the business income always carry credit balance. Purchase account is an expense account, so it is placed in the debit column as the business expenses always carry debit balance. Discount received and interest received both are income accounts, so both these accounts are placed in the credit column as the business incomes always carry credit balance. Interest paid is an expense account, so it is placed in the debit column as the business expenses always carry debit balance. Bad debts is a business loss, so it is placed in the debit column as the business losses always carry a debit balance. From the following list of account balances, prepare a trial balance. Capital is the amount payable by the business to its owners. Therefore, the capital account is always placed in the credit column of the trial balance. Debtors is an asset account, so it is placed in the debit column. All fixed asset accounts always have a debit balance. Therefore, they are placed in the debit column. Sales is an income account, so this account is always placed in the credit column. Return outward or purchase return accounts gets a reverse treatment. When business purchases goods, purchase account is debited. Therefore, when the purchases are returned, purchase return is credited. Therefore, return outward account is placed in the credit column. Bank overdraft is an amount which business owes to the bank or is payable to the bank. Therefore, bank overdraft is a liability. All business liabilities are placed in the credit column. Opening stock, being an asset of the business, is placed in the debit column. Creditors of the business is a liability of the business, so the creditor account are placed in the credit column. Purchases is a business expense, therefore purchase account is placed in the debit column. Return inward or sales return gets a reverse treatment. When business sells goods, sales account is credited. And when sales are returned by the customer, sales return account is debited. Therefore, return inward account is placed in the debit column. Both salary and rent are business expense accounts. Therefore, both these accounts are placed in the debit column. When both the debit and the credit columns of a trial balance are tallied and both the columns have the same balance, this confirms the arithmetical accuracy of the trial balance. Let us take another illustration to prepare the trial balance as on 31st March 24 from the following balances of the Tully Trading LLC. Capital is the amount payable by the business to its owners. Therefore, capital account is always placed in the credit column. Computer is an asset, so it is placed in the debit column. Debtors account are the amounts receivable from the customer and are assets of the business. Therefore, debtor account is placed in the debit column. Sales is an income account, so sales account is always placed in the credit column. Creditors are to whom the business owes money and they are classified as liabilities of the business. Therefore, creditors account are placed in the credit column. Bank overdraft is the amount payable by the business to the bank and is a liability of the business. Therefore, overdraft account is placed in the credit column. Opening stock is an asset of the business and therefore it will be placed in the debit column. Interest received is an income of the business and thus it will be placed in the credit column. Purchase is an expense of the business, so it is placed in the debit column. Return inward or sales return gets a reverse treatment. When business sells goods, sales account is credited, and when the sales are returned by the customer, sales account is debited. Therefore, return inward account is placed in the debit column. Both traveling and office rent are business expenses. Therefore, both will be placed in the debit column. When both the debit and credit columns of a trial balance are totaled and both the columns have the same balance, this confirms the arithmetical accuracy of the trial balance.
Let us draw a correct trial balance from the below trial balance prepared by Polly. The trial balance appearing on your screen is tallied and both the columns total is $400,000. Now let us analyze each account head whether it is placed in the correct column. Capital account represents the amount business owes to its owners. Therefore, $125,000 is correctly placed in the credit column. Computer account represents the assets of the business and it is correctly placed in the debit column. Debtors is an asset of the business and should be placed in the debit column. Therefore, in this illustration, the debtor account is wrongly placed in the credit column. Sales is a revenue account of the business and therefore it will be placed in the credit column. Creditors are the liabilities of the business, therefore they should be placed in the credit column. However, in this illustration, the creditors account is wrongly placed in the debit column. Bank overdraft is an amount payable by the business to the bank. It is a liability of the business and it should be placed in the credit column. Therefore, in this illustration, it is wrongly placed in the debit column. Opening stock, being an asset of the business, is correctly placed in the debit column. Interest received is a business income and therefore $5,000 should appear in the credit column. However, in this illustration, it is wrongly placed in the debit column. Purchase account, being the business expense, is correctly placed in the debit column. Discount received for $15,000, being the business income, is correctly placed in the credit column. Salary account, being the business expense, is correctly placed in the debit column. Similarly, rent account represents the business expense and it is also correctly placed in the debit column. In this trial balance appearing on your screen, 4 account heads are wrongly placed, but still the trial balance is tallied. Post correction, the revised correct trial balance is now appearing on your screens. Debtors account for $95,000 is correctly placed in the debit column. Creditors account of $25,000 is correctly placed in the credit column. Bank overdraft amount of $65,000 is now placed in the correct credit column. Interest received income of $5,000 is also now placed in the correct credit column. Now the total of the debit and the credit columns is still matching after the correct classification of all the accounts. In this section, we will answer few descriptive type questions. Question number 1 is, trial balance is an evidence of the arithmetical accuracy of records. Is it correct? Explain. The answer is, a trial balance essentially proves the arithmetical correctness of the books of account. If totals of both the debit and credit side balances of a trial balance match, then it is proved books are arithmetically correct. Question number 2 is, trial balance is an account. Is it correct? Give reason. The answer is, trial balance is not an account. It is a statement which shows the names and balances of the accounts in the ledger and cash book of an enterprise at any given date. Question number 3 is, state the accounts which are not considered while preparing trial balance. And the answer is, accounts which do not have balances are not considered while preparing the trial balance by the balancing method. Question number 4 is, why is a trial balance important in accounting? And the answer is, it helps detect arithmetic errors in ledger postings, confirms the double entry system is followed, and provides a foundation for preparing the income statement and balance sheet. Question number 5 is, what types of errors can a trial balance detect? And the answer is, it can catch errors like incorrect ledger totals, double posting, posting to wrong side of an account, but it cannot detect errors of omission, commission or compensating errors. Question number 6 is, trial balance facilitates preparation of final accounts. Is it correct? Give reasons. And the answer is, yes, trial balance facilitates preparation of final accounts by making available the balances of all the accounts at one place. Question number 7 is, how is a trial balance prepared? The steps displayed on your screen needs to be followed to prepare a trial balance. List all the ledger accounts, record their closing balances, separate debit and credit balances, total both the columns, and ensure the totals match. In my next lesson on 13 December 2025, we will take a practical journey through the complete accounting cycle from recording business transactions to preparing the trial balance. We begin by identifying the correct subsidiary books, then we will post them and balance the ledger accounts, and finally we'll prepare the trial balance using all ledger balances, ensuring every account is placed on the correct side of the trial balance and the totals tally perfectly.